Hi, everybody. This is the investing teacher, high school science teacher, teaching others how to invest. In this video, I want to go over how to use cash secured puts to earn weekly income. We're going to look at some conservative strategies and some bit more aggressive strategies in terms of high implied volatility, different strike prices, different odds of becoming worthless and keep all your premium, and so on. Let's get right to it. Okay, so I've been doing a lot of research on the Theta Gang, that is a subreddit on Reddit, obviously. And weekly, this swaggy media does send a report on tickers with high implied volatility options. This are a little bit more riskier. Implied volatility means that the stock price should be moving either up or down a little bit more than other ones with lower volatility in general. This one shows pretty high implied volatility, which will earn more premiums. And then if you look at the ticker list, you're looking at percentages of implied volatility. We have almost 200% from Mara, all the way to the hundreds, into the 90s, 80s, and so on. When you're looking at these, by selling a cash secured put, you're going to be selling 100 shares or one option of the stock, which means that when you look at the stock prices of all these, you need to make sure that you have 100 times it. So for instance, Mara, 4.79. If I want to do a cash secured put, you would need to put $479 at least into your brokerage. Now, depending on the strike price you're going to do, it could be less than that, but make sure that you have adequate funds available. I'm not recommending using margin on this, just going straight on money available in your brokerage, okay? So if we look at, say, Marathon Parent Group, the implied volatility is 194%. And then if you go to stockoptionschannel.com, there's many different places to go, but here's one resource. Right now, the stock price is at $5.34. You could sell a put that ends on December 18th, so that's this Friday. And if you sell it at 4, meaning you're willing to put 4 times 100 or $400 in your brokerage, you would be able to make this cash secured put. If the stock price stays above 4 by the end of Friday, you'll just get to keep your premium and you keep your money in your brokerage. If you went less than $4 a share, say it goes to $3.50 or so, then you would be obligated to buy 100 shares of Mara. So right now, if you're looking at the $4 strike price, the bid was 10 cents and the ask is 15. Your last trade was at 13. Times all these by 100. So let's say you're able to get in between the bid ask at 13 cents, 13 times 100, you'd be making $13 in premium. Divide that 13 by the $400 you need to leave in your brokerage, and you're left with a 3.25% return in 1 week. That's assuming that you just sold the cash secured put now, you wait until the end of Friday, and then the end of Friday it is under $4, or not under $4 a share. So 3.25% in 1 week. Very good return if that ends up working. Now, if you look at the current put as worthless, looking at the deltas, implied volatility, right now they're saying there's an 83% chance that this particular option will not go under $4 a share, which means you would get to keep your premium. If you want to be a lot more riskier, again, the stock is at $5.34 right now. If you sell the $5 put, you could make between 60 to 65 cents. Let's say you get the middle at 63, 6.63 times 100, you would earn $63 in premium. You would have to put up $500 in your brokerage, which ends up being a 12.6% return in 1 week. And now this is a bit riskier. They're saying it's a 44% chance that this particular option will not go under 5. So there's a good chance it will. But remember, you're earning that 63 cents or so. Your cost basis would be about $4.40, meaning that even if the stock went under 5 to say 4.75 or so, you're still net gaining on the transaction because you earn that premium. Here's another one that I made trades with PLTR. It's Palantir. If you look at this week, right now we're at 27.97. It is a big up right now, 2.83% this morning. So I don't really recommend doing cash secured puts when it's a very big up day. You typically want to look at down days because you usually get more premium. But just for this example, we're at about $28 in the share price. You could sell a put at $23, which is 17, almost 18% lower than the current price, and you could earn between $25 and $26 in the transaction. So let's say we get $25 divided by the 2,300 you need to put in your brokerage, and you're looking at a about 1% return in a week. Okay, so a lot of people on the Theta Gang are looking at weekly options to get the consistent weekly income. They are a bit riskier. If you are very confident in your stock and you really like the stock, then this is an option to do. If you're not wanting to be as risky, a few things you could do for pellets here is go quite a bit lower than 23. If I go to say $21 a share, you could get 11. So 11 over 21 is still a pretty decent return of 0.5% in a week. Okay, there's a pretty low chance that a stock that's at 28 will go all the way down below 21 in a week. That's why they're saying right now there's a 98% chance that's not going to happen. So again, you could look at your different profiles in terms of your risk and what return you'd like, and then try to find an ideal option there. Now, these are just the basics. There's a lot more you could look at in terms of news stories, their earnings report, their dividends and whatnot. But again, this is just one way that you could go in order to get good weekly income. Now, just for full transparency here, I want to show the put that I made on Pallets here. So I did do this trade last week on 1209. I sold an expiration for 219, so a bit pretty far out, almost 2 months out. I don't recommend necessarily going more than about 45 days on a pretty high volatility stock. At the time, the stock price was $27.39. I made a very, very low strike price of 17.5. So the stock would have to go down $10 in about a month and a half in order for me to possibly lose money on it. I did receive a $129 premium. So if you take the $129 that I earned, divided by the $17.50 that is in my brokerage, we're looking at a 7.4% return in a little over a month and a half. I didn't do the percent gain over price of stock yet, but if you go from 12/9 to January 9 will be 30 days, February 9, 60 days. So we're looking at about 70 days here. If you take your 129 and divide it by 70 days, you're getting about $1.84 per day. It was actually 211 when I actually did the numbers because I did it during the weekend. So every day that I keep this particular option, it'll be $2.11. The delta on this trade was only 0.14. That means there's approximately a 86% chance that it won't go under 17.5. So again, it's just a general overview of doing different weekly options. Cash secured puts I would recommend starting with if you have money in your brokerage. Again, look for stocks that you're very happy with at a lower price than the current price, and then earn those premiums. As well, what you do with those premiums, you can do whatever you want with it. Many times I'll just invest in shares of that particular company to lower the cost basis. I'm also considering different monthly paying dividend or quarterly paying dividend if I'm doing the premium right before the ex-dividend date. Just park my money into that. So if you have any questions, let me know. Like, subscribe, share, all that good stuff. Again, I'm your investing teacher, high school science teacher, teaching others how to invest. You guys have a great day out there. Make some winning trades.